Welcome to the fun and mentals of real estate. I'm glad you joined us today because Glenn has a question of the day.
How do smart investors insure their properties?
Oh, that is a fantastic question.
Yeah.
You know what? Glenn and I are just novices on that, so we had to bring in the expert. And our expert today is Dan Luigs from Insurance Store.
Dan, you're going to make this.
Right.
Thank you for getting the name pronunciation right.
I
Thanks
got
for the invite.
it.
Thanks
How
for
about
having me.
that?
Yeah, well, you're going to make this extra fun. Nothing's more fun than insurance. That's what
So
I'm saying.
Dan, nothing's more fun than we're going to try to make it fun, but it might be a little mental today. So,
Well,
but
I
let's
always
just
say
jump in.
with insurance, there's always two sides of the coin. There's the cost of the premium and the coverage that you're getting.
Right.
And we're just great that we got an expert here today.
Yeah. So when it comes to investment property, Dan, we want to know what a lot of mistakes that investors make along the way here, because I know they make mistakes. So we're going to pepper you with some questions, and I hope you can answer for us. All right.
On the hot seat.
We'll try to go rapid fire.
All right. So question one: how do landlord policies differ from a standard homeowner policy?
Well, the biggest thing there is the fact that a homeowner policy won't pay out if you have tenants in it.
Right. Yeah.
Ooh.
So that one's one that I run into all the time is, well, which one's more expensive? Well, the homeowner's policy by far when there's a claim when you've got tenants in it. So, well, no, I don't understand. Like, which one costs more? It doesn't matter. If one's $1,000 and the other's $1,500, but the $1,000 one doesn't pay out, you have
Right.
a problem. That one's the one that's the most expensive.
Right. So you have to, when you're calling to get insurance, you have to say, this is a rental property. I am going to have tenants in it.
And often people say, well, what if I had tenants? Can you run me two prices? No, it doesn't matter because one isn't even a price.
Right.
So
well,
how
it's like
how is
that.
the insurance company going to find that if somebody's trying to play the system and say, no, I'm living here. I moved out. I had some people move in. And I didn't switch it. How would the insurance company know?
Yeah, so same way that if you were involved and
Yes.
you were deciding to write a check or not write a check, and you've got to follow the rules, you'd follow the rules.
And you're going to look at utility bills.
Look at
gonna
utility
yes.
bills. So it doesn't, with today's internet, it doesn't take a whole lot of looking around to figure things out pretty quickly.
So are there some, I assume there's some different coverages you can get with a landlord policy that you don't get with homeowners because you do have a tenant. It might have some tenant coverage or rent coverage, but we'll get into that. So
rule
there
number
are
one
going to be
is
some
play
differences.
by the rules, right? Don't try and
Yes.
trick the system.
Right, but standardly, my roof's going to get covered. My a lot of standard coverage, but there may be some extra things I want as a landlord that we'll talk about. Okay.
Yes.
All right, great. So, what are the three top coverage gaps investors don't realize that they have? Because this is a little bit different than homeowners.
Yeah, a little bit different than homeowners. Some of the things still apply. So this year, the current topic is a wind and hail deductible. So a lot of people think that they've always had whatever they've always had, and that's what they have now. At renewal, things may have changed. So there may be a percentage deductible, there may be a higher deductible, or there may be a depreciated value on the roof and everything else.
So I used to have the gold standard policy, which meant I don't care what happened to my roof. If I had $1,000 deductible, I paid $1,000 deductible, and that was it.
Correct.
And I don't care what happened in my house. It was $1,000 deductible, and away I went. But that's not the way things are covered anymore, especially when it comes to roofs. Roofs are really the hot button of insurance, I would say today. With that, so it's really become the hot button over the last 2 years at least.
Yes.
Yeah.
The last
Dan, is
two
that just?
radical changes.
I don't know if you know
Radical
this. Is it just in St. Louis because of the hailstorms that went through here, or is it nationwide?
It's not nationwide because a lot of other parts of the country don't have a whole lot of weather.
Okay.
But in the sections that like Oklahoma, Kansas, Illinois, yeah, everything's changing. So Oklahoma's had a 3% wind hail deductible for a long time. 3%.
3%. So if I have a $20,000 roof, I'm paying $6,000.
No. If you have $1 million house or rebuild house, you're paying $30,000.
Wow. Okay. So wait a minute now. I have a roof. I have a bad roof. I got wind and hail damage on it, and it's going to cost $25,000 to replace the roof. But my house, let's just say, is a $700,000 house.
$700,000 rebuild. So
Rebuild.
real
Okay,
estate agents,
not worth.
real
Sorry,
estate
not
agents
worth
love
it.
to talk about the value.
Value,
not
nothing
the
to do.
rebuild.
Insurance has nothing to do with value. It's got everything to do with what does it cost to rebuild it.
To rebuild it.
Okay, so if it costs $700,000 to rebuild my house, you're saying I've got to pay $21,000
Mhm.
of that
And who do I make the
$25,000
$4,000
roof?
check out to?
Wow.
You can write your $21,000 check. And then
Wow.
the
So
insurance,
yeah, watch your paperwork for renewal. This is huge.
100%.
Right. Okay. And so when I'm getting an insurance policy, can I still get the $1,000 deductible on a landlord policy on a roof?
Not likely.
Not
There are
likely.
a few companies that still do it, but it's
Okay.
increasingly, unbelievably uncommon.
Okay. So what are they going to mostly?
So there's a percentage deductible. Most commonly, it's 1%.
1%, but it's the value of the rebuild.
value of
Every
the
time I
rebuild.
have a claim.
Every time you have a claim. Correct.
Wow. So if I have that $700,000 rebuild, I'm paying $7,000 deductible, no matter what, a roof, furnace blows up, whatever.
So there's a separate deductible for the things that aren't wind and hail.
Okay.
So for the wind and
Fantastic.
hail,
Okay.
and then depending on the age of the roof and other things, there could be a wholly different other deductible also, like a depreciated value or actual cash value. So if you've got a 20-year-old roof, you might be paying a bigger deductible than
Could
you
probably do a whole
Right.
podcast just on the roofs alone. It seems like half of my clients have had the roof replaced in the last 2 years, 2 or 3 years.
Oh yeah, I just got a new roof, and I got a new roof on my home about 4 or 5 years ago, and I just got a new one on my rental that you
Yes.
did the
Yes.
insurance policy for.
Yes, yes.
And it was sweet because I only had a $100 deductible. So thank you, Dan, for that. Okay, so 3 top coverage gaps investors don't realize they have. Okay, so that's
the
roof
first
one.
one's the roof one.
Mhm. Okay.
They may have, from memory, known what their deductible is, and it may have changed, and they didn't
Okay.
know that they now have a 10 or 20 or
Right.
$100,000 deductible.
Okay.
The second one would be, I guess, like a replacement cost number. Some investors try to influence that number and get as low as they can.
Right. So it really cost me $700,000 to rebuild, but I'm going to insure for $500.
Mm-hmm.
So
And I could
that's a problem.
See this a particular trap because when I'm an investor, when I'm trying to maximize my profits, I'm going to get that insurance. I want that insurance as low as possible because I got profits, not realizing that it might bite me in the end if I have a big claim or get in trouble or something happens to really hurt me. Yeah.
And then the other one I'd say is loss of rents. So I've had clients say, I don't want that coverage. I don't want to pay for it. And then the tornado came.
Oh, yeah.
And then you're not collecting 10, 20, 30, 50 rents.
Right. You're still making your mortgage payment, though.
Because maybe
Right.
it takes 6 months
Or
to,
2 years.
or 2 years
Yes.
to either rebuild or remodel the house, depending on how much damage you had, and you have loss of rent that whole entire time. So that's definitely something that's different than homeowners is a loss of rent coverage. Is that on a $700,000 rebuild, or let's just say more rental property being a $500,000 rebuild? Maybe I bought it for $350 and it cost $500. I mean, I don't know what's the rule of thumb is. I know y'all have formulas for what it costs to rebuild, depending on if it's all brick or just a frame or whatever.
There's a company called Marshall Swiftbeck that does a rebuild calculator. So somehow there's a company that gets paid to figure out how much it costs to tear stuff down and build it again.
And is that part of your quote when you do the
It is.
insurance quote?
Yeah,
Right.
yeah, it is.
Yeah, and you can fudge that number some if you want, if the client wants to, because they're just shooting themselves in the foot by lowering it.
My short answer is no.
Most of them are going to have a mortgage, and they're going to have to meet that minimum mortgage coverage as well.
Because
right?
you want full replacement.
Oh, of course.
You
yes.
want that whole
We're not-
rebuild.
We're not making the loan without that.
So if it's a $700,000 rebuild, you want it
Yes.
insured for $700,000 rebuild.
Right. You're not going to be able to finance your purchase if you don't do that.
Interesting. Okay. All right. What liability coverage do you recommend for landlords, especially those with multiple doors?
So it's really whatever you've got at risk. So if you've got a couple $1 million assets, I'd have a couple $1 million umbrella policy.
So umbrella, now I'm moving to liability being an umbrella policy. Is there some liability in the policy itself, I would
Yes.
imagine?
So when you're talking liability, you're talking
Medical.
about some slip and fall, somebody gets
Right.
hurt in your property.
Yes, yeah,
Right,
yeah. So
right.
if something goes wrong and somebody's coming to sue you,
Mhm.
the liability coverage is there for that. Might not cover everything, but it covers a lot of things. Trip and fall is the most common. And inside the policy, you'll have 300,000, 500,000, maybe $1 million. And then if you've got more assets at risk after that, then you get an additional umbrella policy, $1 million, $2 million or more.
Right.
This is one of the reasons why incorporating each rental property individually helps protect against
The limited
being
liability.
limited
corporation.
liability
Yes.
being that I'm only limited to liability of that property and they can't touch my other properties.
Yeah, we could bring an attorney in to talk more about that.
Yeah, that's one reason you look at doing that. Okay, do insurance companies require or recommend renters insurance for tenants? And you just touched on this. Does the lender require that?
It does not.
So if you have a loan, they don't. So is it really like full coverage of what I was getting, or only what, say, an adjuster says, oh, well, rent's really for your house are really only $2,000. I don't care if you were getting $2,500. Or is it based on exactly what I got?
Most landlord policies cover actual loss of rent.
Actually what I was getting when I had the lease for.
Correct.
And what if it was vacant?
That's a whole different layer to it. Certain times when it's vacant and a claim happens, you can still get loss of rent.
I see.
But the
So when you're talking
claim
about
would need to be covered, so a landlord policy wouldn't necessarily cover a vacant property.
Right, you have to have the right type of insurance for that, which is probably skipping ahead on one of our.
you were hitting on something else about the insurance. Am I going to require the person that's renting that property from me to have insurance on it? Because his insurance will be different though, because that's going to insure his contents, his furniture, his clothes, his all that. Would that stuff be covered under my insurance policy?
So great question. Tenants think.
Did you hear that, Angie?
Yeah.
Tenants think that the landlord covers all their stuff for them.
Yeah, I know.
I have a rental property. I've personally received that phone call.
Right.
And I said, I don't know why you're calling me to talk to me about water that got in your garage.
Right.
The day that it rained, 12 inches or whatever in 4 hours.
Right.
And she's like, oh, that's right. You required me to get a landlord policy or a renter's policy. I'm so grateful.
Yes.
Right.
So,
And that should be in your lease, by the way. We haven't really gotten to all the ins and outs of the lease, but that requirement that Dan just mentioned of your tenant to have a certain amount of coverage should be in your lease, and they need to send that to you before you give them a key.
Yes, 100%.
I'm just saying you have no leverage after they get the key.
$300,000, $500,000 of liability isn't an expensive coverage for tenants to get. So do require them to have those higher levels. Say they have a kitchen fire. Do you want to pay for the kitchen fire, or do you want their renter's policy to pay for the kitchen
Right.
fire?
A renter's policy would cover that.
Yep.
Because they were at fault.
Oh, I'm learning more. This is more fun than I thought it was going to be, Dan.
Different than a roof leak. Roof leak's my responsibility.
Yes. Yep. Roof's on the landlord.
Right. The fire on the stove is yours. It's the tenant's. Okay. All right. Super good. How about older homes in St. Louis? Okay. So how does that affect insurability? So, the city, when I first bought, they were only like, I'm showing my age now, but they were only like 60 years old. Now they're 80 and 100 years old in the city, right? And so, and they're all brick, and they're full masonry construction, not this brick veneer like you have out in the county today.
Right,
so,
right.
How does that affect the policy?
So there's a few things there. Electricity is the big,
We were
huge
hitting on that
factor
earlier.
with
The knob and
older homes.
tube and
The knob and tube wiring.
Federal
no insurance
Reserve. What was the
company
name of
likes
that box
those
we were
anymore.
talking about?
Pacific.
And then as you
Federal
get
Pacific.
you get into the 70s, the Federal Pacific panels that then help your house catch fire. So
And aluminum wiring.
insurance companies don't like aluminum wiring. They don't like Federal Pacific. They can't stand knob and tube. Still ways to get knob and tube insured, but it's unbelievably difficult.
When you say difficult, more expensive too.
Only a few insurance carriers, I would imagine.
So
right?
if we have 20 companies that we can place it with, these two companies might not be more expensive because of, and they don't have a surcharge for the knob and tube.
Right.
However, they just have their price, and then we can't go with competition. We only have two prices to go with.
Exactly.
Yeah, very few to choose from. So while we're talking about these older homes, when you're coming up with your model to invest, right? We talked about the models in early in the series here. You need to get your model where it is, how many bedrooms, how many baths. Roof plays into this. I personally wouldn't buy one with a flat roof. I don't care for flat roofs, whatever. But there's a lot of great buys out there on properties in the city with flat roofs. You don't see them in the county as much, but they do exist. So when I have a flat roof that gets tarred and maybe a membrane put on it, which are expensive, as opposed to a shingled, typical A-frame shingled roof, how much more expensive typically is the policy, or is it more expensive with a flat roof versus?
So kind of the same principle as the electricity. certain companies just won't do flat roof
There you go.
insurance. So, is it more expensive? Yeah, probably, because there's a lot less competition.
A lot less competition. So when you're looking at a house with a flat roof, see what it costs to insure that, but maybe before you get that under contract,
And
because
then often when it's a flat roof, it's also brick.
yeah,
And you brought up brick earlier. Brick increases the rebuild cost a lot.
a lot, especially
Yeah.
full masonry.
So in the city, you could have $100,000 house that you're purchasing, but
Mm-hmm.
replacement cost might be $600,000 for the house.
You know, those houses are a little more sturdier. Does that come into effect at all, or you just look at the rebuild?
Yeah,
And I think we
it
saw
doesn't
with this
really-
recent tornado in May that it didn't really stand up to the brick houses very well. That tornado won the battle.
Yes.
We saw a lot of
yes.
brick houses get destroyed, which
And a lot of them are still standing. However, the windows got messed up,
yes,
the roof
roof.
got
Right.
My
messed
friend's
up,
house, the roof
the
was
water
off, yeah.
got in the whole structure, so the whole structure's still totaled,
Right.
even though you've got a perfectly
Right.
functional. I haven't talked to any of the engineer guys to are those that look perfect.
Mm-hmm.
Can we just fix them
Right.
up, or do they need to be knocked down because they're structurally unsound?
Right.
Wow.
Wow. There's a lot to consider there. So there you go.
Yeah.
All right. Are there red flags during an inspection that I could look for that might immediately drive up my rates or cause my property maybe even to be uninsurable? A few things like electric you just talked about. Anything else that I would look for too?
Electric, I'd pay a lot of attention. Plumbing, a lot of attention. A little bit to the heating and air conditioning, just from a cost factor. And then the roof is a huge, huge, huge.
So what
thing.
about plumbing? What am I looking for in plumbing?
I just want to see if it's been kept up to date.
So if I have an older building and it's got the older cast iron stacks, you're saying the insurance company cares?
The insurance company doesn't care as much about that. Some of them do,
Mm-hmm.
but it's more of a, if you got an 80-year-old cast iron, you know you've got an expense coming soon.
Right.
So
Right.
that's why I would look at the cast iron.
Are there add-on that you really recommend? So is this like sewer backup, that sort of thing?
Yeah, so sewer backup's something that some investors cover, some don't. Insurance companies don't like to offer that coverage, so they often limit the amount you can get. So if I was an investor, I would look to see what's the most I can get if I've got a lot to risk.
Right. My basement's finished.
Yeah. If you
So
got a
there's
finished
sewer
basement,
backup, there's earthquake, right? That's a rider. That doesn't
that's a rider.
automatically
Correct.
come.
Yep, that doesn't automatically come.
Not
Flood
even on a
insurance-
regular homeowner's policy, that's a rider.
Correct. Yep. So the similarities between a standard homeowners and a landlord. You got earthquake insurance, you got flood insurance, you've got.
It's the same thing with the lender. He's going to make sure it's not in a floodplain,
Right.
and he's going to let you know right away.
Yep. So on the insurance side, we don't go and look these properties up to see if they're in a floodplain. So a lot of people assume that we're the ones. We're not the flood insurance police.
Right.
Those guys are.
Yes.
The lender is.
We are,
And
but
if
if
you're
we
buying
pay-
cash, you better go get your own
Get a
flood letter.
Yeah, they're not expensive.
They're
easy to
not
get.
expensive.
Right.
You can call Glenn, he'll help you get one.
Easy, yeah.
So you just mentioned upgrades in wiring, HVAC, and roof age can probably meaningfully reduce my premium then.
Yeah, that if you got a new roof on it versus a 20-year-old roof, radical difference in price.
Right. So what do they like to see? What's the age? Newer than?
Zero would be great.
What do you consider to be?
Yeah. What do you think is
it
old?
2
What do
years, 3
insurance
years?
companies consider old?
Older than 10 years these days is considered an old roof.
Roofs are a big deal, you guys. Big deal on when you're buying.
You know, and the roofer will tell you it's a 30-year roof, and the insurance company's saying, well, it's older than 10.
Yeah.
What's that got to do with anything? 10's still new.
Right.
But some insurance companies are 15, some are loosening up to 20. But recently, 10 was a number that a lot of them decided 11 becomes old.
Wow. All right, super good. You know what? We're going to have to make a second part with you, Dan.
Yeah.
That's okay. All right, well, we are going to next week. We're going to talk about short-term rentals, maybe some multifamilies, vacant houses, stuff like that. So more to come next week. Appreciate you, Dan,
Yes,
being
thanks,
here
Yes,
today.
thanks for having me.
And tune in next week when we talk more.
Awesome.
I'm your host, Angela Dillman, here with the Dillman Group at Keller Williams Realty Chesterfield. And this is my wealth building partner.
Glenn Calvin with Guild Mortgage, and we're here to do what?
We are here to help you live your dream lifestyle
Leave legacies that matter.
and build wealth. All right, till next week. See you then.